You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion, delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest. Welcome back. Jay Kaplan is back. Welcome.
Well, thank you. Great to be here.
Glad to have you with us. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it, although, I'll tell you.
Quiet, numbskulls, I'm broadcasting.
Even though I am the operator-in-chief here for Ron Siegel Radio, we've added some folks to help with answering the phones because there's a lot of people that have been calling in lately. We've been making a lot of phone calls lately. I got a great team of people that are doing a lot of stuff to try and help the community. So if you haven't heard from them, shame on you. But we'll be calling. Be careful if you see our 800-306-1990, 800-306-1990. It'll tell you that we are reaching out just to say hello. And let me remind you, again, if you have any home or finance-related questions, call me. While I have a great team when it comes to developing the financing plan, even though we have some operators helping me now, I still personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And we are celebrating today. So I don't know about this one. So I gotta look at this a little closer because it's Barbie and Barney Backlash Day.
What?
This is the day that allows parents to take a vacation from all the repetitive sing-alongs and storytelling. Josh, are you guys into Barney and Barbie? No, your kids are they past it, or they're just not into it? Not into it. Okay. I didn't ever have to deal with Barbie because I have 3 boys, but Barney, yeah, we had Barney. We had the Power Rangers. I don't know if you got the Power. I don't even know what the new ones are. Power Rangers are still out there. Tommy, that was Eric's favorite. But let's move right along because today is also National Chocolate Covered Anything Day.
All right.
Now, right, Jay?
Now you're talking.
Chocolate covered anything. It doesn't matter. Strawberries or pretzels. I've had that one. And I think I'll stop right there. Let's see. Dow Jones Industrial Average now up 122 points. We've got the S&P 500 down 14. NASDAQ down 255 points. Should be good for interest rates. Oil up $1.95 a barrel. Do we want to know about it? Being that we're going to take a few days off and do some of our best of radio shows coming up for the next couple of weeks, let's take a look at the oil pricing before we leave. Right here in the formerly Golden State, we're at $4.67 a gallon.
Ow!
$4.67. Now, if you want free gas, just go out into Seal Beach. I think they're going to I shouldn't say that. Oh, that's bad. They're going to have some out there, I think, in the next day or two, but different story. Josh, we're almost $1 a gallon above you right now. Nevada's at $3.87 a gallon. California, $4.67 a gallon. Just to put that in context, Hawaii is $4.34 a gallon. just for you, Josh. You can pay $3.10 next week. So up there in North Dakota, $3.10 a gallon. Lori, you're at $3.05. Our tremendous underwriter, Lori, $3.05 a gallon. I better get back to looking at what's going on in the world and in the markets. Now we got the commentary from the Federal Reserve yesterday. They said almost exactly what we've been telling you they would say, right? So in doubling their tapering, it's kind of a double negative, isn't it? Double taper. So now they're going to cut back their purchases by $30 billion a month. Now, thank goodness, even my wife doesn't spend that much, but $30 billion a month. $20 billion in treasuries, $10 billion in mortgage-backed securities. And then they said probably, or if you look at their dot plot chart, probably raise interest rates 3 times next year. But they don't say when. Okay, we gotta write this down. Josh, we might have to start doing some of these things. We might have to write down some of the predictions from Ron Siegel Radio. That way, if they come to pass, we replay them. If they don't come to pass, we ignore them. Just like all the rest of the media, right? So March 4th. Oh, I'm sorry, May 4th, I think is the date. May 4th, I believe, will be the date that we get our first interest rate hike from the Federal Reserve. So that'll be 2022. I'm just going to put in here Federal Reserve meeting dates. Why do I say that? Don't think that I'm very smart. I'm just a simple guy. So here's why we're going to tell you that that's what we're forecasting at Ron Siegel Radio. So based on a $30 billion a month tapering, they should be done with their tapering by March. I don't really think that they're going to raise rates in the middle of tapering, right? So they have a meeting March 15th and 16th. I don't think they're going to announce an increase in rates then. But the very next meeting, May 3rd and 4th, I think just a educated guess from somebody that's been doing this for many, many decades. I believe that it's going to be the 4th of May when we'll hear the first time the Federal Reserve says that we've got increasing interest rates. We got that down on our greatness tracker to see if I know what the heck I'm talking about. Now, one thing that could influence this is the media. I'm sorry, not the media. I'm COVID. I shouldn't say the media. It's all about the media. And I don't get mad at me because I know there's been a lot of people that have had a lot of suffering through COVID. I know friends that have died through COVID, all of that. Even though I also know that we have a lot more people dying right now from smoking cigarettes than we do COVID. But that's a different story. Government makes a lot of money on cigarettes. They spend a lot on COVID, so cigarettes are okay, I guess. I don't know. But last night, I spent a little bit of time watching the local news, if there is such a thing. Channel 9, you guys suck. I'm just going to throw that right out there. So here's what Jay, you might even, Jay and I don't agree on a lot politically, but we agree on being respectful. But last night, every broadcast of the Channel 9 news had probably 4, 5, 6 minutes about COVID, right? 15 more people got COVID, and 3 people are in California with COVID or in Orange County with COVID, and 1 was out of town. I know the whole life story of all these people with COVID. The hospitals are increasing their bed rate by 15%. So, and 15% doesn't say anything because if they go from 100 to 115, that's 15%. So it doesn't tell me anything.
Right.
But I don't think you have this, Jay, but North Orange County, we're serviced by our sanitation was a company called Republic Sanitation.
No, I don't have that.
You guys have waste management, right?
Correct.
Well, North Orange County, Republic is on strike, right?
Ah.
So they've got hundreds of thousands of people are not getting their trash picked up, and the local news doesn't cover it. Now, one of the things that strikers always want is to get the support of the communities, right? If the more support they get of the community, the more pressure it puts on management to get whatever they want, right? It's just the way unions work, right? I mean, that's one of the They collectively bargain and they hope that they can get community support. The media is not covering it at all. They're too busy covering COVID, which by all definitions is less severe now than it was a year ago. I just report this stuff. The media doesn't want you to know it. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, that's an interesting one. How a reverse mortgage can interact with taxes in retirement. Now, I saw this article, and it worked out perfect because we've got the reverse mortgage guru in the studio with us. So we could talk about that. Homebuyers are going on a shopping spree this winter. Trust matters, and so does who you choose to work with in your divorce. All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio, and if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You've got the phone. Make the call, 800-306-1990, 800-306-1990. So let's see what the markets are doing. The Dow Jones now up 114 points. The NASDAQ is down 271 points, down 271 on the NASDAQ. Ow! Painful right there. We're looking at the S&P 500 down 12. 10-year Treasury down 4 basis points. Mortgage-backed securities up 30 basis points. That means interest rates are down just a bit. Why? Okay, well, we got housing starts for November reported at a 1.679 million unit pace, up 177,000 from last month's revised report of 1.502 million. Housing permits, good indicator of future starts, increased to 1.712 million units. This is up 59,000 from last month's revised figure of 1.653. We're also looking at the Freddie Mac. Every week at this time, Freddie Mac comes out with their mortgage market survey, and fascinates me that the only place that you're going to get this information is right here on Ron Siegel Radio. So no, not the Freddie Mac number. That comes out from everybody, right? So Freddie Mac comes out and says the average loan is at 3.12% on a 30-year fixed rate loan. 3.12. That's the headline. That'll be covered in the news today. Cost you 0.6% to get it, or 0.6 point to get it. Okay, that'll be in that. They don't cover that, but that's on the report from Freddie Mac. The other part that they don't tell you, though, is when does Freddie Mac do their survey? Yeah. Okay, so I don't know the answer to any Jeopardy questions, but I will tell you this one. They do their surveys from on Monday to Wednesday of the week that they release the data, Monday through Wednesday. Now, Jay, you ran a very large mortgage company.
Yeah,
Okay,
Relatively large.
relatively
you
large.
know.
Depends on whose relative you're talking about, right?
Yeah,
But
yeah.
when you had things that came from the government that you had to respond to, did you respond as quick as possible, or did you wait as long as you could? Most people want to get it off their desk pretty quick, right?
Yeah, exactly.
Right. So
no, yeah, we wanted to.
get it done, get it out of here, so I don't forget it and whatnot. Right. That's a lot of people are that way. So the survey really is, what did rates look like on Monday this past week? Not what they did today. They reported it today. 3.12% is what they were on Monday. Now, I'm going to share this with you because I can. Because I don't have some of these crazy people that sponsor radio shows, right? That tell you these teaser rates. We've got a 2.5 interest rate on a 30-year fixed, 2.77 APR. Now, when you have a spread of 27 basis points between the rate and the APR, what does that mean? It means you're spending a lot of money to buy down that interest rate, right? So it's not like you can just call and say, I want that 2.5. Well, you could do it, but if you've got a $500,000 loan, you're going to be paying $7,000 or $8,000 to get that rate. About $7,000 or $8,000 to get the rate, something like that. That's what you hear at Ron Siegel Radio. We give you the truth. Okay, some people like it, some don't. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990. So Jay Kaplan is in the house. We haven't talked to you since we heard that the new lending limit for the FHA reverse mortgage, $970,800.
Right.
Wow, that's a big number.
Yeah, it's been going up pretty much continuously.
Okay, now what I want to do is
year.
I want to dig into the confusion of that.
Yes.
So does that mean that if I have a $2 million house, that I could come to you and say, Jay, I want that FHA reverse mortgage, and I'm assuming I qualify and I'm 75 years old and I qualify for the 50% loan to value, can I then go and get that $970,000 loan from you?
No.
But they said it's 970, Jay.
That's the number that is used in the equations to figure out what your loan amount will and can, or I should say can be. Okay. So they're looking at a total price of a home now as higher than it was last year, or it's going to change the first of the year. So on the first of the year, it's going up to that new number. That new number will mean more people will be able to get more cash if their home is worth higher than it was or has been this year. And the equation is still, rule of thumb anyway, about 50%, although with the rates where they are now, it's probably above 50%. And I say probably because each and every person is a little different. It's going to go by, of course, the value of the home, which is now going to be more.
Josh, you and I are a lot different. So
Yeah.
I just throw that out there.
We used to be pretty close to the same, but I lost a lot of that. Anyway, the price of the home, and that factor is going to be better now as the price goes up. The other is your age, which most people are aging. So it's going to be different based on each age, the price of your property and the interest rate. And right now the interest rates are very, very low. So I can't imagine it ever being better than it is right now.
So all that 970, if as a simple guy and all that stuff that you just told us, Jay, which is all absolutely correct. But with all of that being said, what I really know is that $970,800 is the amount that gets put into the equation that I don't understand how to figure out, and I have to call you to tell me what it is.
Yeah, and basically, to simplify things, because like you say, we're simple people.
Absolutely.
If your property is worth closer to that higher number, you're going to be able to have more in your cash or line of credit. The benefit will be higher.
So if I have a $1 million house and just for a rule of thumb, we don't know what the exact will be, but I could probably get a loan for $500,000 or $450,000.
Yeah, and that's going
$435,000.
to be slightly over the 50% that we talked about because the limit is a little slightly less than $1 million. So yes, the answer
So
to your
roughly it's
question is yes.
So the 970 times 50%, 400 and
Yes.
485, something like that, give or take. Now that we're not going to use exacts because we're just trying to use a rule of thumb. Because here's the issue: I know over the next 2 weeks, just because I've been tracking you on your phones. Oh no, that's Facebook and Google that do that, right? So I know that you're going to be seeing a lot of people between Christmas and New Year's and holiday parties and time off with family, friends, coworkers, whatever. And you might even come across some elderly people, right? And some of them, unfortunately, may have some cash flow difficulties, right? Or they're equity rich and cash poor, and they're in their golden years, right? All that is just kind of givens. Right, so they may be saying, you know, something. I got this house for an $800,000 house, and you know, I owe nothing on it, and I'm eating dog food. Do you have any ideas? Right, a reverse mortgage if you're old enough, and you might be able to get somewhere right around $400,000 in availability.
Right,
and what you need is a consultation.
right, and availability means just that. You're taking the money, as Ron Siegel would say, that's buried in your backyard in a coffee can, and you're actually bringing it above, I hate to use this word for older people, above ground, so that it's available. It's liquid. That's all it is. You're not particularly losing a great deal of equity. And as far as that 50% limit, I mean, this program is to help people either when they're in the need or to help people mitigate risk if they're not in need. And they meaning, you know, the entire system doesn't want you using your last penny.
And you know something, here's the sad story. And I know it's a holiday time, but I always like to give you solutions as well. So the sad story is last week or the week before, I consulted with a gentleman. And his parents are elderly. They live out of state. They've got a home that's $400,000 in value, and they have no loan on it. Dad gets sick a few years ago. They go through all of their life savings in medical and care and look to get a reverse mortgage, and they can't because the property doesn't qualify under the FHA guidelines. It's a condo. What do you do? Right? So they're looking at this. They've got some challenges going on in their life. And had they been more proactive and taken out a reverse mortgage when the property did qualify several years ago, wow, they wouldn't have had this issue right now. Now they're looking for solutions. We've given them some solutions. We understand the solutions. But here's the idea is the reverse mortgage is not what a lot of people think. And I see the news all the time. It's the mortgage of last opportunity. That's not it. It's the mortgage for planning, and we're going to talk about that with Jay Kaplan when I come back. We're going to talk about how a reverse mortgage can interact with taxes in retirement, all that and more. Your home buyers going on a shopping spree this winter. I don't know, Josh. Maybe we won't talk about divorce today. We skipped it yesterday. Yeah. We might skip it today again. So we'll see about all that. Maybe we're going to do a word on wealth in the next segment, and then we'll get into with the more reverses, and then we'll do real time after that. That's what you call a live cue, so that the producer knows that I'm going off schedule and going to drive him crazy. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, shame on you. But the replay is available. Ron Siegel 1 on YouTube. Ron Siegel, the numero 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio within every market. Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. So it's funny when you, thank goodness Josh is there watching what's going on. Right, so I start chatting before I turn the microphone on, and right as I knew that we were coming back live, I'm looking around my desk, I'm searching, I'm hunting, where the heck are my glasses? And then I find them, they're on top of my head, and then Josh turns the camera on. So we were good there, you didn't even see that, but I do throw that out there just because, full disclosure, and yes, my drinking glass is only water. There's no vodka in there yet.
Yeah.
But it is a clear liquid, so nobody really knows. Let's talk about Word on Wealth segment today, being brought to you by MySoCalLender.com, MySoCalLender.com. How a reverse mortgage can interact with taxes in retirement. That's an interesting subject that I found this morning. So how do reverse mortgages interact with retirement? A lot of seniors, they've got some pretty highly appreciated properties. They've got highly appreciated homes. Many of them have been there for a long time, right? And so what are they going to do with the property when they've got all they're equity rich and cash poor? That's a big question because, you know, when I'm going to tell you right now, Jay, you've been in lending for at least since the last century, maybe a little more than that. I was
going to say a little over 400 years.
In all the years that you're doing loans, would it be fair to say that you prefer lending money to people who want money as opposed to people who need money?
Absolutely. But it is a good feeling, as you know, when somebody has a need to be able to help cure that situation. That's always a good thing. But want instead of need is a much better way to go.
Yeah. So, and that's the biggie right there. So you want to make sure that you're acting when you choose, not when someone else does. But look at this scenario. It's on Market Watch. Describe a scenario in which a reverse mortgage loan can provide benefit on taxes for senior homeowners in retirement. According to Bill Bishop, tax columnist, many seniors own hugely appreciated homes but are short of cash. Inflation makes things worse, and it doesn't look like it's going to get better anytime soon. An unwelcome side effect of owning a hugely appreciated home is the fact that selling the property to raise cash can trigger a taxable gain well in excess of the federal home sale gain exclusion break, $500,000 for people filing jointly, $250,000 for unmarried individuals. Holding on to a residence as appreciated in a pronounced way can be very beneficial to an older American's tax bill due to basis step-up rule. We know that. This rule involves the way that a home's value interacts with the lives of the homeowners. If you're married and your spouse predeceases you, the basis of the portion of the home owned by your departed mate, typically 50%, gets stepped up to fair market value. This usually removes half of the appreciation that has occurred over the years from the federal income tax rolls. Jay and I are not tax advisors.
No.
Right? We
That's
recommend go get tax advice. We are tax questioners.
Yeah.
Right?
Right.
We understand enough about taxes to say, this could be a problem. Here's a possible solution. Let's bring in a CPA to chat about this. Right?
Yeah.
Is that a fair statement?
Absolutely. Or a tax advisor.
Tax advisor. Now, if you've got that highly appreciated property and you don't owe a lot on it, Jay, can I get a reverse mortgage on it?
Of course.
Right? I can. Now, the scenario I talked about before the break, that was an FHA loan, and it was a condo complex that was non-warrantable.
Yeah, and I don't mean to break in because I know you've got specific things, but non-warrantable is one thing. Most condominium projects will probably be warrantable.
Right.
And sometimes it takes a little more work, but I'm the one, and people on my team, as from you, do the work for you.
Right.
And get it warrantable.
Yeah. So this one, they had a problem with the reserves and collecting of their HOAs and all that.
Yeah.
So posed a problem, right? So went through the process. It's not eligible, but there's other solutions. But for the most part, we can go and talk and help liberate some of that equity. And it then is going to be, you don't have to take that tax hit. Now, we know for certain that before you take the tax hit, call me, 800-306-1990.
Always.
Now, here's, Jay, you're gonna love that. I don't think you've heard me use this line. So when anybody passes, there are 3 groups that get your stuff: LO, CH, and IRS. Those are the 3 groups that get it. Now,
CH, I'm guessing, is children.
not charitable.
All right, charitable.
LO is loved ones.
Love to. Okay, so that covers all of
Right.
those. But we don't want to talk about the.
So now, only 2 out of 3. You can do it only 2 out of 3 if you want. Now, if you only have to do 2 out of those 3, loved ones, charitable organization, or IRS, which is the one that you want to avoid? Pretty simple, right? IRS. Now, if that's you, go to rsralpha3taxguard.com. rsralpha3taxguard.com. Josh will put that up on the screen. So if you're watching us on ronsiegelradio.tv or any of our socials, rsralpha3taxguard.com. Very short form, take you right over to a quick video that we did on a radio broadcast. Taxes are optional. And we show you how to do that in a legal way using a 94-year-old tax code. Okay, so, and again, I'm not the tax guy. I interviewed him. But now let's go back to what we're talking about here with Jay Kaplan. Right, so we want to get some of that liquidity. We want to liberate some of the money. We've worked hard for that money.
Yeah, we do.
And you worked a whole lifetime to get that. Let's just go back to that $800,000 house.
Okay.
With a $400,000 reverse mortgage if you qualify, right? And you're 75 years old. That means, that fits you, right, Jay?
That's me.
So I don't even have a calculator here, but if I take $400,000 divided by the 25 years probably that you have left on this side of the sidewalk, right? That's going to give us about $16,000. That's more than most people's Social Security.
That's
right?
Sure. Yeah.
And that's not counting
Absolutely.
any appreciation.
Correct.
Right? Because you can take that money out and it's going to, well, Jay's told us over time. I don't understand how it all works. He's the guru, but I understand enough to say, Jay, does that line of credit, that $400,000 line of credit, grow over the next 25 years?
Yes, it does. So it's going to be bigger next year than it is today.
So over 25 years, it's going to even be bigger.
You'll have that much more that you can use should you want to use it.
So over that next 25 years that we're probably on this planet, right? You're going to have more than that new Social Security, extra Social Security.
Oh, yeah.
Think about that concept. Now, now when you liberate money from your equity using the reverse mortgage loan, is that a taxable event?
No.
No tax.
No taxes on that.
Okay, so let's go back to my first premise here.
Yeah.
Can I give that money to my loved ones?
You can do whatever you want with that cash.
So we've got 2 out of 3 again, right?
Absolutely.
Loved
you
ones,
can-
charitable organization, and only to the IRS if you choose to.
Yeah, and you can take care of yourself too with health care and that kind of thing.
Right.
Which,
So,
and it'll keep growing. And as Ron Siegel has told us many times, and what I learned from Ron is that the equity in California is huge, and I'm sorry, the appreciation is huge, and that should be well ahead of any amounts that you take.
so let's talk about that, because over the holiday period, we're going to come in contact with a lot of parents and grandparents. This may be appropriate for them. And one of the things that the parents want to do is they want to make sure they leave money behind for their kids. Some kids say, I don't want mom and dad to spend my legacy. I wanted my mom to spend her last dime with her last breath. She didn't accomplish that, unfortunately. But we're going to talk about, when we come back, I want to talk to Jay about the legacy issue.
Oh, yeah.
Are we going to leave more or less to our kids when we use a reverse mortgage loan? We'll talk about that when we come back. And we're going to also do, yes, I'll get that real-time real estate segment, Homebuyers, going on a shopping spree this winter. We'll talk about that as well. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990. 800-306-1990. Real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text SLT Home Digest to 79564. Find your dream home before someone else does. I don't know why this warm water is getting me lately. I've got to come back on air, have one little sip, and all of a sudden you got the air bubbles. Homebuyers going on a shopping spree this winter. Black Friday and Cyber Monday are over, which means some shoppers have wrapped up their holiday buying. I did, but there's still a group of buyers that are very active this holiday season. Homebuyers. Experts anticipate the real estate market will see a flurry of activity this winter, and that's great news for today's sellers. If you're planning on listing your home, there's no need to wait until the spring for better conditions. Today's real estate market is already heating up. Buyers have warmed up to the idea of purchasing this winter. The past 18 months brought about significant lifestyle changes for many of us, including the rise in remote work, job changes, and even early retirement for some. Some of them even chose to retire early. For many people, I guess that's a bad joke, right? For many people, it's prompting a search for their next home now rather than waiting for warmer months. Lawrence Yoon, chief economist at the National Association of Realtors, points out how this winter may see a significant number of sales. Compared to past winter seasons, this winter season's sales activity will be stronger. This winter, there will be more sales compared to pre-pandemic winters, going all the way back to 2006, unquote. I was going to ask that question because if I remember last winter, we were in a pandemic, and I don't know if we want to compare numbers to pandemic numbers. You might be wondering, what does strong sales activity mean for you? It means there are likely to be more buyers active in the market this winter, far more than normal pre-pandemic years. In the same article, Danielle Hale, chief economist for Realtor.com puts it in these simple terms. I like simple. Quote, sellers can expect to see plenty of buyers, unquote. That's as simple as it gets. The more buyers there are in the market, the more likely it is your home will get noticed. That can lead to multiple offer scenario or a potential bidding war. Receiving multiple offers on your home means you can select the right offer and terms for your situation, so you can truly win as a seller when you list your house this winter. Bottom line, if you're thinking about selling your house, you don't need to wait until the spring. Buyers are ready now. Let's connect. Let's chat. That's the Real-Time Real Estate segment, brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text SLT Home Digest to 79564. Go to rsrhomedigest.com. rsrhomedigest.com. Continuing our conversation, Jay Kaplan is in the studio. He's with us. He's in studio with us right now. There was a long time that you weren't coming into the studio. You had some health issues, so we're glad to have you back with us.
Yeah, actually, yeah, it was
You're
here.
We're gonna
Not long,
celebrate.
and then before that, I had health issues.
Yeah.
Earlier in the year, and so
Glad to have him back. So let's talk about equity, legacy, and simple math, because I'm a simple guy. So just foundation number, Orange County, California, over the last 62 years, I think the number that I saw most recently says that we appreciate at 5.3%. LA County is about the same, not exactly. LA County is a little bit less than Orange County. Riverside County, you're at about 4.95%. So if we look at all the counties that are right here around us, would it be, can we just go with simple man math, simple woman math, and say 5%? Okay, that's an easy number. I'm a simple guy.
yeah, and it's conservative, so it'll
Conservative.
cover everything.
So we talked about earlier about this theoretic property that we have. It's $800,000 in value, and we owe nothing on it. We're going to get a reverse mortgage loan, $400,000. Not talking about how much you can get right now, what you can do with it, any of that kind of thing. We're not talking about that right now. Just talking legacy. So your property, if the last 62 years holds true, your property is going to grow at $40,000 a year. Is that fair?
Very.
You've got $400,000 in this reverse mortgage loan that you're not gonna be paying the loan on it. You're not making a loan payment unless you want to.
Of course you can.
Right? If you want to, you can do it. If you don't want to, don't do it. Doesn't matter. It's all up to you. No one's going to give you any thoughts either way. That $400,000 loan, is it fair to say that between the loan and the mortgage insurance and everything else, 3%, 4%, 5%, right? Let's say high. Let's say high.
Well, yeah, you're getting awful high there, but go ahead.
Can we go 4%?
Yeah, I think that's, yeah.
Okay, so at 4%, that means your loan is going to grow at $16,000 a year.
Right.
Right?
Right.
We're not doing the compounding and all that. I know that those numbers are going to be a little bit different. Right? So your property grew at 400, your loan grew at 16.
Right, 40. Yeah.
I'm sorry, your property grew at 40.
Well, I like your number though.
Yeah.
Yeah.
But so your legacy grew by $24,000.
Right. And a lot of times people think of legacy as only your property, but legacy is really everything that you're going to pass on. And property is a major part of it if you have property. And so is your bank account. And so are all of your 401s and your other investment accounts.
Yeah, that $400,000 that you took, you probably didn't go and buy a new boat, a new car. Well, boats right now you can sell if you buy them right. You can sell them for more than you paid for them. But that's not normally the case. But you're either buying investments or you're not taking money out of your IRA, or you're taking it out of your IRA strategically. You're not using other cash flow to live on, or something along those lines.
Right. And in a down year, instead of taking it out of your investments or IRAs or 401s, you take it out of your line of credit instead. That won't happen very often. There was just a paper out by Phil Walker and Sachs and his brother, speaking of of wealth, housing wealth, and mitigating risk. You'll mitigate that risk a great deal on those investments, that if the few times there is a down year, you leave as much money as you can in your investments and you take it instead from the line of credit.
Sure. Take
And
take
overall, you've got so much more
more legacy.
at the end.
Take the money, talk to your financial planner and your accountant. Take what you need to from your RMD, right? We don't want you to get those big penalties, but take just the bare minimum, live off of this, and you might even want to buy more investment items when the market's down. Or would you rather buy when the market is up or when the market is down?
Let me think about that, but not too long.
I don't think we even need to get the Jeopardy music for that one. Right? We don't need the we know the answer to that one. Right? We want to buy when the market is down. Some of us tend to do it the other way around, but that's not by choice. Right? But the bottom line right there, it's really simple. You're wanting to take that money and use it strategically. And if you don't have the liquidity, you can't be strategic.
Correct.
Right? It's just that simple. Right? So the concept here is talk to your financial people, but I'm going to throw this out there just because I can, Jay.
Go, throw it.
A lot of people are going to tell you, don't do a reverse mortgage. That's the worst thing in the whole world. And the question I'm going to say is, how many have they done? How many have they studied? How many families do they know that have been hurt by them? How many families do they know that have been helped by them? And I can answer every one of those questions. Well, maybe not precise. I've helped a lot of families with them.
Right.
You've helped more.
Because that's the only
older.
thing I do.
He's older, so he's
you
helped
do
more.
a lot. Yeah, you do a lot
Right.
more variety.
No, but we've helped between us. We've helped a lot of families.
Absolutely.
They've all, once they understand them, I personally, again, Jay, you've done more than I have. I have not had one family come to me and say, I wish I had not done that. Not one. Even when I've dealt with the kids, helping them liquidate the reverse mortgage, I haven't had anybody that's come to me and said, boy, that was the worst thing I ever could have done. Have you had that?
Never.
No, I mean, and so the people that don't understand them, of course they don't like them because they don't know what they're talking about. By definition, they don't understand them.
Right.
Right? So tell those people to call me and let me explain it to them. Let me answer every one of the negative questions they might have. Every one of them. I'm not going to hold back on any. Because having done so many of them, and I've dealt with it from one side that very, very few people have ever dealt with. I was actually the co-successor trustee for my parents, and they had a reverse mortgage, so I helped liquidate it. Right? So I understand that part of it too, from talking to the lender, the servicer, and how cordial they are, how nice they are, how helpful they are.
Yeah.
I don't know how the heck they found out that my mom died sooner than I did, but that was a different story. Not quite. It was pretty close though. But you know, they're telling you the options that you have to liquidate the loan, because there's 3 options for liquidating. Right? They explained all of them to us.
Right.
I knew them obviously because I've shared that with many people, but I wanted to hear it from what the servicer's telling people.
Yeah.
And
you have time to do that.
There you go, Jay. I mean, because I tell people, now the reverse mortgage is not quite the same, but my counsel to anybody who's lost a loved one is do absolutely nothing that you don't have to do with the estate for a year. Wait a full year till you do anything. Because the likelihood is that if you do some decisions that you make before that time period, you're not going to be happy with down the road. Right? Because you made them in a poor state of mind.
Yeah.
Right?
Yeah.
Distressed and grief, and you've got other things that you're dealing with emotionally, physically, financially. So do as little as you, only do the things you have to for a year. With ours, what we did is, I had, they sent me a note saying, do you know what you want to do? And I said, no. And so they said, okay, well, we'll talk to you in a month. Okay. Call me in a month. You know what you want to do? No. We were working on some ideas. Well, we got to the 6-month mark. And do you know what you're going to do? Yes, we have an idea. This is what we're going to do. And okay, we're going to give you an extension.
Yeah, that's almost automatic.
So they gave us an extension. So even though the only thing that is nerve-wracking is the minute the last person on the loan passes, that's an event of default.
Well, yeah,
So technical default. So that notice is filed because the lien holder wants to make sure that they're securing whatever they're entitled to, and they're on the record with you.
Right.
But it's not an issue. It's not like they're coming and knocking down your door.
Correct.
It's a great product. And as you talk to mom, dad, grandma, and grandpa during the holidays, if they're getting up on age, they've got equity, it should be part of a conversation to look forward, because you want to make sure, and I know that you don't want to talk about trusts at this time of year, but they should be in place.
Absolutely.
Maybe it's a good time of the year to update them, right? You might have had a baby during the year. You might have gotten married during the year. If you're a beneficiary, that might need to be addressed, right? Where do you want your stuff to go to? Yeah. Maybe you have a new grandkid right during the year, right? Yeah. Great grandkid. I'm not there yet, right? Right. But those are all conversations that we want to be.
And I don't want to sound too much like that guy for Hair Club for men, but I don't only talk about reverse mortgages. I have one.
Yeah, and I don't talk about Hair Club for Men because I don't have hair.
Right? So. And you look just fine without it. We don't all need it.
Yes, well, some of us. I have a face for radio. Although I can say that about Josh because he's never on air with us. So I got the face for radio, but I'm on video every day anyway. So it's a great product, and I don't want to harp it on debt. You don't, you're not losing your property. You're not giving up any control of your property. You want to sell it, refinance it, give it away.
Yeah, and so many studies have shown that those people with a reverse mortgage usually end up with more of a legacy to pass on.
More stuff to give away to the three acronyms.
And we've talked a lot about different things of investments, other property. We've talked about a lot of that, but it's all there.
So we didn't talk about, we get that $400,000, Jay. What can I do with that?
Anything you want.
Okay, so we can have a party at Josh's.
We absolutely, but the thing is,
$400,000 party.
Do we want to invite Josh?
He doesn't want to invite us. That's the question right there. He'll point us toward the Mandalay Bay or one of those. There's a club, Tao, Thouds. I don't know, something along those. I don't know. I'm probably too old. You and I are probably too old for that, Jay. But they open after we go to bed. So,
what do you mean? They open at 5 in the evening?
That's about it. But the bottom line is you can do whatever you want with that. Yeah. If you want to help your kids buy a house, you can do it. You want to enjoy that money.
Yeah.
While you're here to see it, give it to your kids and grandkids.
Yeah. Pay for your own health care if you can, instead of asking your children for it. Protect your investments. Increase your investments. All of that good stuff.
All kinds of good stuff right there. So if you want more information about one of my favorite loans, because it helps so many people, the home equity conversion mortgage, better known as the reverse mortgage, give me a call at 800-306-1990. Jay and I like to help as many people as we can. But again, 800-306-1990, 800-306-1990. We're going to be taking a couple weeks off. Josh is doing some best of shows for us. I want to wish you all a very, very Happy New Year, Merry Christmas, Happy Holidays, whatever you celebrate. Enjoy it. Enjoy your time with family, friends. Just have a great time. We're going to look forward to seeing you January 3rd. We'll be here, though, if you have any questions. Call me anytime. 800-306-1990. Remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
Pour me something tall and strong, make it a hurricane before I go insane. It's only half